G'day guys, and welcome back to another episode of Breaking Down the Charts. It's been an absolutely crazy week, and even past fortnight has been pretty crazy with volatility all the way across the market. We've seen Bitcoin obviously trending up and down in this range in between the 10,000 and the 11,500 area. And basically today I want to take a look at this pitchfork structure that I've got in place, as well as looking at some of the moving average lines that we're looking at. So more on the fundamentals. Obviously, we had some bad news come through over about 2 weeks ago with regards to Qcoin. They had a exchange hacking and they've been locked off all of their deposits and withdrawals for the past 2 weeks. For those of you who have had coins in there and been waiting to get coins out, you can actually go and access them now. Withdrawals and deposits have opened back up. Up to yourself if you want to continue using Qcoin. However, I would trade with caution on there. We always advise not to have too much coin on any exchange at one point in time, and particularly after any hacking has occurred, it's definitely not a great idea to leave a large amount of coin there. So, for the safest option, get it onto a hardware wallet, get it onto even a MetaMask wallet or an Exodus wallet. Anything is better than having it on a centralized exchange at the end of the day. Looking onto the charts on Bitcoin, we've obviously had a really nice run over the past couple of days, and it is continuing on to run, which is really, really good. From the moving average lines, we've broken through some of the shorting day moving averages and pushed on above them, which is nice to see. We're trading at above average price over the past 20 days, over the past 50 days, over the past 500 days and 200 days. So that's a really good sign. Things are quite bullish. I believe, based on what I'm looking at here, we've got this pitchfork set up here that we are looking to kind of push up towards this green trend line up here. Obviously, we're going to have to break the yearly high to get into that area. However, I do think we will start kind of tracking between this trend line that I've manually drawn, which is coming along the bottom and top here, and between this kind of pitchfork area now. So if we can push up into the top of this trend line here and get into that kind of 12,000 territory, I think that's a really good place. And then obviously I think we'll have a bit of a pullback. Let's have a quick look at the RSI on Bitcoin. I would assume it's getting pretty close to 70 now after last night's push. Okay, so we're sitting at around about 62% on the RSI. So getting really close to that 70 point where obviously we usually see market pullbacks. If we look back to this last time the RSI hit 70 up here, obviously the market has a massive run and it tends to run out of steam when it kind of breaks at that 85 at least. Pretty much textbook material. Every time we get above the 70 line and trade at about 80, 85%, the market tends to cool off or trade in a consolidation box for a while. For those of you who are looking to pick up Bitcoin, there's always going to be that kind of fear of missing out, starting to wonder, oh, should have I picked up more? Is this the lowest point in the market's going to see for the next 1, 2, 3 years? For those of you who are in that situation, it's always best to follow a dollar cost average strategy. But a lot of people messaged me this morning asking, hey, should I buy? It looks like Bitcoin's getting momentum again. I don't want to miss out. Make sure that you're just picking up little bits and pieces as the market pulls back. Again, when the market is all the way up at the 85, up between the 70 and the 85% on the RSI, it's usually not the best time to buy. You want to try and buy when the market pulls back down to these kind of 30% areas. For example, right here when the RSI was down at 30%, that would have been a pretty good time to put in some orders. And you're not putting in the whole bank account. You just putting in little bits and pieces, picking up at different prices, dollar cost averaging in, and at the bottom of that 30% territory tends to be a good time to do that. Overall, looks really good on the market. Really happy with this positive price action. As I said, it's been pretty phenomenal that Bitcoin didn't have more of a crash based on the Qcoin hacking. It didn't really respond negatively to it at all. It just kind of pushed on through. To be honest, a lot of the Qcoin hacking was dealt with fairly well. Some of the smaller cap coins that had a large amount of the project's coins, such as ALEPH, that was on there. Obviously, they had to go through a couple of procedures and fork off the chain and reissue tokens. Same thing with DIA, although DIA did not fork off the chain. But yeah, obviously really hard on those smaller cap projects. They've been hit quite drastically, and we'll talk about those later on in this episode. But nevertheless, it's good to see positive price action and things trending on the upward. Moving on to Ethereum, things are looking quite nice for Ethereum. Again, Ethereum has outperformed Bitcoin this whole year of 2020, which has been really, really nice to see. I mean, I have a lot of faith in the Ethereum project. I think it's one of the biggest backbones of the whole ecosystem in the cryptocurrency space. But at the end of the day, basically what we're looking at here is a Fibonacci retracement from the lows in March 2020 all the way to the highs in September. And basically, it looks like we've kind of bounced off this 0.618 fib line on this point here, and we're starting to track up towards the 0.786. A full retracement would put us up to around about 480 USD, which is where we were towards the start of September. But basically, I think that we are kind of continue on this little trend line that I've manually drawn here. It looks like we've kind of popped back down into it, but then pushed straight back up to the top of it. I wouldn't be surprised if we had a bit of a pullback over the next couple of days, and then hopefully we even try and break the top of this trend line, and potentially we'll start trading within an upper trend line, which would be kind of between here and about around this area here. So if we can break through here, that would be nice. We'll just have to wait and see what basically happens. Bear in mind, Ethereum did release their testnet, which was good. So basically, for those who don't know, Ethereum is moving from a proof of work algorithm towards a proof of stake algorithm, which basically means that they're not going to have really expensive hardware running their blockchain anymore. They're moving towards a mechanism where you stake 32 Ethereum in order to be rewarded from the blockchain. So what tends to happen when that happens, a lot of coin gets locked up, which reduces the amount of supply on the network. And obviously that tends to push prices higher. The lower supply there is of a coin, the higher we tend to see prices on the market. So basically, what happened with the Ethereum testnet, they needed, I think it was about 12,000 nodes in order for when we go to live on Ethereum 2.0, there needs to be 12,000 nodes online. I'll fact check that, but I'll just make sure in order for the Ethereum mainnet to actually fork. And in the testnet, the exact same thing had to happen, but they didn't get enough people, obviously, setting up those testnet nodes. And so, unfortunately, it was a bit of a fail of a test, and there's been delays in launching onto Ethereum 2.0. So, for those of you who want to see the best things out of Ethereum, make sure you get a testnet node set up, have a bit of a play around with it. For those of you that it's too advanced for, when we do come 2.0 staking, we will actually be hosting nodes for you on behalf of mining so through Mine Digital. So there is going to be a platform where all you're going to need to do is simply deposit whether it's 32 Ethereum or 4 Ethereum onto the Mine Digital platform, and essentially the platform is going to be called House of Hodl, by the way, and essentially we will host the node for you, and you'll have a nice UI interface where you'll actually be able to see the coins coming in every day. So that's really, really, I think it's a great product that's been set up by Grant and the Mind Digital team, something that I've been working on with Grant in order to make sure that we take care of all our investors and make sure people who aren't as tech savvy or don't have the time to monitor nodes or figure out how to set them up, they have access to a very reliable platform where they can still earn rewards from Ethereum 2.0. So all the best with that. That's pretty much it that I've got for Ethereum. Just waiting for 2.0 to come out. It does look like the market is kind of recognizing the same thing, and people are buying up Ethereum in order to get those coins staked. We have seen gas fees come down quite a lot in recent times, which is really good to see. But nevertheless, there's still a lot of craze going on with all this compound and yield farming and the rest of it. And I've mentioned this a couple of times, but I do feel like these kind of things need to die off a little bit before we can actually achieve the next highs. At the moment, it's just sucking up a lot of the funds in the market, a lot of the liquidity in the market, and unfortunately, I do feel like it's holding us back from pushing up on the all-time highs with Bitcoin and Ethereum. I do feel like it's died off to a degree. It's not as hype crazy. There's not as much FOMO around it. There has been major pull-offs on YFI particularly, which is one of the ringleaders for this yield farming area. So I do think that the market's starting to forget about these things, or at least tone it down and push forward on what the originals are, things like Bitcoin and Ethereum. Moving on to Digibyte, which is a major coin for the mining store family at the moment, who are largely been mining Digibyte over the past months. Basically, what I see happening here is we kind of failed to break out on the upside of this ascending wedge that was forming. Nevertheless, we have set some key price levels, and I'm going to try and break that down for you guys today as well. So essentially, what I'm seeing here is I've got this kind of upward trend line here, which we've broken down on the downside, unfortunately. But nevertheless, there's always opportunities that occur when this happens. So what I'm going to do is look into the moving averages for you guys and let you know where I see key price levels and where I feel like support and resistance are going to be formed. So if you come in a little bit closer, I have drawn this consolidation box here. This is my buy zone. So if Digibyte gets close down towards the 500-day, 200-day moving average line, just there. So it's 200 is the fourth one that I've got. The 200-day moving average line. I feel like this is quite a good price to buy at. We haven't really seen Digibyte get below that 200-day moving average line since the start of May, when we had the market kind of take a really nice turn for Digibyte. So if it does hit this, I feel like that is going to be a really strong support line. It's going to take a lot of volume to break down to the downside, and I do feel like that could be a really good point to put some buys in. I remember earlier on, I signaled out that there was a good opportunity to buy around here. Remember, sometimes it does push down a little bit lower, but then of course it did come up. A lot of the mining store members did sell out some of their Digibyte who picked it up at about 180 sats. They managed to sell it at about a 200 to 220 sats. So right now we're sitting on this kind of 220 mark. Basically, yeah, I think if we enter this kind of buy zone here, it's a good opportunity to start picking up some Digibyte, particularly if we get really close to this 500-day moving average. 200-day moving average could be a really good place to buy. And then looking to obviously clip out towards the 240 Satoshi, or if we break through, then you could sell some around this 240 Satoshi is kind of what I'm looking at the moment. LOKI had a bit of a run down. I do feel like this is to do with the new wrapped LOKI that you can start putting into liquidity pools. I feel like there's a lot of people who have wanted to try this out and take advantage of these higher yields without lockups, and so they're kind of maybe pulling down their nodes, closing off their nodes, and selling some on the market and trading some on the market. So I feel like this will kind of cool off pretty quickly, to be honest, and I feel like we're going to find some really strong support down at this level here, right along the bottom trend line. I do think it'll take a lot to break down any lower than this point here. So personally, I'll probably be picking up quite a bit of LOKI down here to set up a bunch of nodes and hold them for the long run. I always pick up LOKI. I think one of my previous episodes, I got a crazy call, and then I kind of picked up a full node. Literally, it was right here back in July, and then we had a huge, ridiculous run up, and I ended up selling off some of my yields from my other nodes that I've been running, but I did lock up my node, so I didn't sell this one. But recently, I did manage to cash out quite a lot from a node that I did unlock back at, it was about dollar 10 US, which was really lucky, but really good as well. So yeah, as I say, when LOKI does come to these low areas, I am definitely keen to pick up full nodes and then look to hold them and sell off my yields when we get into these pumps. Again, my long-term strategy with LOKI is pretty much to pick up nodes at these low support lines. I host them, and I'm pretty much going to continue hosting them until I feel that LOKI has achieved a stable price of around $1 per coin, or if yields get as low as, say 10%. The only way yields will get as low as 10% is if more and more nodes get on the market and it becomes too competitive. At the moment, they're at about 24% per year, or 20 to 24% per year. So I'm more than happy kind of holding these at nodes and increasing my position by 20 to 24% a year. I think that's quite a good investment. Moving on from LOKI, we've got Tether. So Tether obviously has kind of moved towards a proof of stake, which has been really harsh on the mining industry at the moment, because a lot of the hash power has been flooded to Digibyte. But nevertheless, I've still been tracking this coin. We know quite a bit about it and how it's going. It's obviously in the price oracle bunch of coins, and so is Chainlink. So I do feel like a lot of the big price pull off for Tello was really largely just because Chainlink also had quite a big pull off, or it looks like Chainlink's recovering a bit better than Teller itself, and so, probably fair so. I do think Chainlink is a better project than Teller, if I'll be completely honest. But nevertheless, we'll go back to TRB. TRB BTC and have a look at it. There could be an opportunity to pick up here. There obviously has been some pretty large price action in the past, and we saw Teller get all the way up to, if we look at the USD charts, it got almost up to about 87 cents from memory. Let's have a look. Yeah, about 88, 89 cents. And now it's all the way back down at kind of 22 cents. So I picked up a lot of my Teller from mining back in the day around this area here at the 5 cent territory. Sold a lot of it way too early at around 29 cents, but nevertheless, that was $29. Sorry, we're talking dollars, not cents here. At $29, I picked it up at $5 and sold it at $29. And then it's kind of pushed all the way up to the 88. I had a little bit left over that which I sold along the way, but ultimately it's come all the way back down to this kind of $22 mark. So could be, worth having a look at. Again, I'm not too happy with how the project has turned at the moment. To be honest, I think it's getting a little bit too centralized for me. And again, as I said, I'd probably prefer Chainlink, but nevertheless, it's pretty fair price given where it's got to. And if Chainlink starts to really take off again, then I would expect Teller to do the same thing. So maybe could be one for people to have a look at. Serum seems to be just kind of pottling along at the moment, not too much going on. I don't really have too much to report on Serum. I'm just kind of holding my bag that I picked up. If I'll be completely honest, I'm just kind of waiting for the FTX platform, a decentralized platform, to kick off a little bit more, get them to start launching some coins, and yeah, start to see more price action in general. More of a long-term hold for me. I do have a lot of faith. I think FTX have been pretty good operators in the space, and the projects that they work on should be successful, and therefore I'm willing to hold this one. ALEPH, on the other hand, unfortunately was a large corporate of the Qcoin hacking, which is really unfortunate. Nevertheless, I think that the ALEPH team dealt with the hacking in an exceptional way. For those people that don't understand the background of what's happened here, basically Qcoin haven't had an exchange hacking, and unfortunately ALEPH had just kind of released a product on Qcoin where you could deposit a lot of your coins on Qcoin and soft stake them and earn rewards. So as you can imagine, a lot of the liquidity in the market flooded to Qcoin, and I think about 80% of ALEPH's coins were on the Qcoin exchange. That was so that people could earn rewards, and then obviously when the exchange got hacked, all of the deposits and withdrawals were locked off, and unfortunately ALEPH had taken quite a bit of a beating on the price, furthermore than what it already had kind of had. It was hopefully going to start to enter that more recovery phase, and then this Qcoin exchange hacking has happened, and obviously there's been a bit of a disruption in the project. So between 5 cents and 10 cents, I think is a great place to pick up ALEPH. I think that's dirt cheap for what it can achieve in the long run. I've had extensive chats with some of the more deep analysts in the Discord community, including Original L, who was one of the people who recommended ALEPH and brought it to my attention. And basically, if you can pick up ALEPH between 5 and 10 cents, and even get to close to holding around 200,000 ALEPH and host some nodes and earn yields, I do think this is a project that is worth holding on to for the long run. We potentially are going to look at hosting some nodes this week. I'm going to spend some time getting one up myself, and then if it's quite easy and simple and smooth, I may look to do some community nodes where the mining store members can contribute 10 or 20,000 LF, and I'll host it on behalf of everyone and then distribute the rewards at the end of the staking period. So again, yeah, I do think that this has it's at a good value to pick up some. I've been picking up some anything below 10 cents, between 10 and 5 cents, and I've got enough to host a couple of nodes now as well. So if anyone is interested in that, feel free to send me a DM this week and I'll have a look into it for you. If we can get enough people that are looking to host some ALEPH nodes I know a lot of people have 20, 30, 50,000 sitting around but don't have the full 200,000. I can combine that together for everyone. It will be a trusting system. I won't be able to do it as a trustless system like I do with LOKI. You will have to probably send the coins to a secure wallet, which I'll host on behalf of everyone, and then I'll distribute payments to everyone as well at the end of the staking period. So let me know if people are interested in that. That's just a bit of an update of what's going on with ALEPH. As for Compound Coin, again, kind of just holding this one for the long term. It's in that liquidity mining kind of area, so I do think it's got a lot of potential. It's not all bad. The liquidity mining, I actually think it is quite a important concept in the cryptocurrency industry. I just do think it's a bit overhyped, just like Bitcoin was in 2017. Although I love Bitcoin, I can well and truly admit that in 2017 it was in an absolute bubble and there was just stupid money going into it and people, looking to get rich quick, basically. So I think the same kind of thing is happening in the liquidity mining kind of area. As it is important, it is a great concept, but nevertheless, it's just a bit overhyped. But I do think Compound has a good future for the long term. For coins that I'm looking to buy this week, I'm going to have close eyes on RSR. This is a project that we actually released in our top three picks for cryptocurrency at the start of 2020, and basically it has done quite exceptionally well. It did have obviously a major pullback, and I do have a feeling I know why that was through some of the groups that I'm in. But basically, I do feel like the project has got a lot of potential in the long term. It's in the kind of payment gateway systems. I'm hoping to see some kind of partnership form with PayPal, where you'll basically be able to use the RSR um, stablecoin in order to sell and transact with on PayPal. So you could be basically looking at something on eBay and sell your RSR coins automatically through PayPal, and purchase, say, whatever the item on eBay might be. So I do really like RSI. I do really like their team. The research team at Mining Store is quite bullish on RSR, and down at these lows, I think it's a very fair price to pick up some RSR for those people that are interested. I'll probably be looking at getting quite a substantial amount of RSI down here. My first target will obviously be at this 38% fib line, which is where I might sell, say, off half of what I pick off potentially. But ultimately, I would actually like to hold this for more of the long run. And as you can see, it's at a really good price compared to where it has been in the past. Moving on, the last one is DIA. Obviously, we've seen a bit of a curl up in DIA's price. Again, this coin is in that price oracle bunch of coins, similar to Chainlink and TRB. So it could be worth picking some of this coin up here, particularly for those people who follow the price oracle market and a research with TRB and a research with Chainlink. This is definitely a good way to diversify your price oracle selection of coins. Other than that, guys, that's pretty much it for this week. If anyone's got any questions, obviously leave them in the description below, or if you're in the Discord, of course, make sure that you put your questions in there and engage in the chat there. But there's some serious opportunities, particularly in RSR. I think DigiByte is one to watch as well. Okay, as I mentioned, this is kind of like my buy zone here. But other than that, that's pretty much everything, guys. The last one as well, of course, Loki at a very suppressed price. If you can pick up some Loki to host a full node, it's about 16,500 Loki to host a full node. Then just send me a private message in Discord, and I'll definitely look to host you and get you earning about 24% yield per year. Other than that, guys, have a good week and stay safe with the trading.